My name is Reggie Kuipers, and I'll be presenting on the office market today. We all saw an abrupt stall into the way we officed in 2020. The office market was rocked, but Sioux Falls showed some resiliency. Prior to the pandemic, 3.4% of us were working from home. After or during the pandemic, 88% of us were working from home. The scary thing for Sioux Falls is that it's estimated that 57% of financial services workers can probably work from home. Now that's going to lead to some problems and some issues. The term team building was Googled 10% more last year than any other previous year. Let's take a look at Sioux Falls. There are 15 million square feet of office space in the city of Sioux Falls, and today we're focusing on 8.3 million square feet of tenant-occupied space. Now, the big takeaway from this slide is the vacancy. 9.9%, it's exactly the same as last year. That was shocking to us. Now, I will say the lease rates did drop a little bit year over year, but we'll talk about that here in just a few slides. Another big takeaway is the sales transactions. 39 sales transactions for a whopping $95 million. Well, what happened? Let's take a look. I want to draw your attention to the red bar. That is $95 million worth of office transactions last year. Well, what happened? There were two massive outliers. The building you see on the top of the screen is the Sanford Health Building. That sold as an investment transaction last year for over $30 million. The building on the bottom you see is the Courthouse Square Building, or the KSFY building downtown. That sold for over $20 million last year. So let's remove those and see what happens. There were 37 transactions for $42 million. It is still showing resiliency. I want to point out something. We had 39 business owners or investors say, you know what, in the middle of a pandemic, I'm going to invest in an office building in Sioux Falls. That to me is a sign of confidence. Let's go take a look at the submarkets. We're going to start downtown. And the really cool thing about downtown, over the last 10 years, we've added submarkets to downtown. If you want space downtown today, you can have it downtown or uptown or on the East Bank. I look for continued expansion and gentrification of the office space, especially on the East Bank in the next couple years. Let's look at the numbers. 2.3 million square feet of office space downtown, tenant-occupied office space. Outliers on this slide, or the big takeaways, are vacancy rate. Class A vacancy rate, 2.2%. In fact, the Class A office space has been under 5% for 5 consecutive years. It's probably time for us to see a multi-story, multi-tenant office building downtown. The asking lease rates did go down just a little bit last year. We don't think that that's a cause for concern. Let's take a look at vacancy. Again, I want to draw your attention to the blue bar. Class A office space. It's bouncing around on the bottom. It's time for somebody to get in the ground with a new office building downtown. That Class B and C bar, the red bar, that did go up a little bit last year, but I want to point out nationally, these numbers are 15 to 17% combined. So it feels really good to own an office building downtown, and it's really hard to find space. Let's go look at suburban market. The suburban market consists of about 5.9 million square feet. Again, I want you to look at vacancy here. It decreased in the middle of a pandemic. Our office vacancy rate decreased in all asset classes last year. Now, I will say our lease rates did go down again a little bit, but I really think this is more of just proactive landlords getting out in front of a looming vacancy spike, and they're just being proactive, and they're being smart landlords and keeping their buildings full. Let's take a look at vacancy. Again, I want to draw your attention to the blue bar, Class A vacancy, 5.5%. Keep in mind, downtown was at 2.2%, and suburban is 5.5%. If you're looking for Class A office space in the city of Sioux Falls, good luck. Now, I get asked all the time, well, what about all these vacant office buildings, or ghost buildings, as I like to call them? This is a pretty common picture as you drive around the city of Sioux Falls. This picture was taken midday, midweek, not a car in the parking lot. Now, these tenants and or their owners are still paying their rent and they're paying mortgages. It remains to be seen what happens as we shift and we come back to the office in 21, how much of this space is needed and what will happen. We're going to keep a close eye on that. Now we're going to look at some predictions. We're going to spend a little time here with all that's going on in the office sector today. We believe that vacancy is going to go up. Construction will probably decrease year over year unless we see that big new construction project, probably downtown. I think that that's probably a 2022 project. Now, our office sales are going to hold pretty steady. The amount of transactions, the amount of sales volume will decrease. I just don't think we're going to see two massive investment or massive office buildings being traded this year. For years, office has kind of been hibernating. And for years, we've talked about office densification, more people in less space. I think we're going to see reverse densification moving forward, where we're going to put less people in more space, and that's going to lead to some office redesigning and some new layouts. Most of us saw some form of home office last year, and I think we're going to continue to see that, and we're going to be officing from home. We are going to see some additional sublease space come on the market this year, primarily from call centers and the tech industry and maybe some operations folks. The one shining star in 2020 was these professional service-based businesses. Medical, independent medical, banking, engineering, insurance, daycares. We did a ton of daycare deals last year. And we all saw a couple new banks coming to Sioux Falls last year, which is again showing the signs of resilience in our market. So let's take a look at the real estate cycle. We saw some decreasing vacancy rates, low construction. I think that we zoomed up and over hyper supply, down recession, and I think we're in recovery right now. And I would look for us to hang out here for at least a year and maybe two. That concludes my report. Thank you for your time and have a great day.